as we approach the second round of earnings season for 2025, we take a look back at the earnings from the previous year, this time examining the contribution of foreign subsidiaries to Nigerian banks' profits. Nairametrics reports that in 2024, 5 Nigerian banks generated a combined 1.695 trillion naira in pre-tax profits from their foreign subsidiaries, which accounted for 33.5% of their combined group profit of 5.060 trillion naira. Zenith Bank generated 187 billion naira in pre-tax profit from its 4 foreign subsidiaries in 2024. And as you can see in the charts as well, 14% of the group's reported pre-tax profit. First Holdco, the parent company of First Bank of Nigeria, disclosed that its foreign subsidiaries contributed 27.5% of its profit before tax. And also in the charts that is going to be displayed, GTCO's foreign subsidiaries contribution stood at 21.57%, almost unchanged from the 21.44% recorded in 2023. Access Holdings' 15 offshore subsidiaries generated 459.99 billion naira in pre-tax profit in 2024, representing 131% year-on-year. And of course, UBA stood at the top. United Bank for Africa, no surprises there. 20 African countries and the UK, they led their peers in 2024 by generating 56.36 billion naira in pre-tax profit for its foreign operations. We have Ayokunle Olubunmi, Head Financial Institutions Ratings at Agusto, joining us now. Great to have you in.
Good morning.
Good morning to you. And from this data that we have here, give us a picture of just how important, cross-border operations are becoming for the banks, the big banks.
Okay, I think like you mentioned earlier, is getting very important for the banks, not to rely on earnings from Nigeria, but to also look at opportunity outside the country. Because as you will see, the Nigerian banks, right, a lot of them are quite big, right? They have enough capital. So for them to be able to sweat that capital and generate enough returns, right? We'll see that, look, they need to also tap on other markets. And what you've also noticed is that actually reduces their vulnerability to headwinds and what is happening in Nigeria. So for instance, assuming that the Nigerian market is getting tough for them, the returns that they will get from all the other markets will also even help and cushion the performance. For instance, one of the top banks, 2 years ago, the Nigerian subsidiary, the Nigerian parent, right, it didn't actually do well. Well, a lot of people didn't notice because of the contribution that they have from all the other foreign subsidiaries. Also, is helping the banks to also get to be strategically important in Africa. For instance, right, if you check the last 2 years, if you check the ranking of the biggest banks in Africa, I think one of Nigeria banks, specifically Access Bank, features as one of the largest in Africa, such that it's getting important that when you're talking about banks in Africa, right, Nigerian banks are actually a force to be reckoned with.
I mean, indeed, a force to be reckoned with. And looking deeper, well, I mean, let's also take a look at what happened between 2023 and 2024. We saw these subsidiaries, their contribution go up 110.7%. So 2023, 496 billion was their contribution. And now we're talking in trillions. So what would you say have been the key drivers for this increased significant 110% contribution from these foreign subsidiaries?
Okay, I think we also need to also bear in mind that in 2024, we had about 40% devaluation of the Naira. So if you now look at that vis-a-vis these foreign subsidiaries where they earn in foreign currency, you notice that devaluation actually bloats the actual performance of some of those subsidiaries. Having said that, what we've seen over the years is that the Nigerian banks they're updating their strategy, trying to see how they can make the subsidiaries more profitable. Also, like someone will say that if you can succeed in Nigeria, it's going to be very easy for you to actually, I would say that, let me say it will be too difficult for you to succeed elsewhere. So you could say that the terrain in Nigeria is more difficult than what you have in other areas. So in all the other banks, in other countries. So you see the banks trying to retool, change their strategy, working on some of the things that they've done. And also the beauty of it is that if you check some of these countries, the Nigerian market seems to be somewhere ahead of them. So you see that some of the innovation and some of the things that they are seeing in Nigeria, they are exporting it into these markets. And that also accounted for the increased performance of this subsidiary. Having said that, we need to also take into account the devaluation of the Naira. So to see that by the time you even remove the impact of the deval, you notice that the performance wasn't as significant as we are seeing in that particular report.
I mean, that devaluation, the bank seems to have benefited on several fronts last year in 2024. We'll see whether they can keep this up in 2025. I think it will be the real truth teller here. But let's dive into the details a bit more. United Bank for Africa, they are topping the list when it comes to contributions from foreign subsidiaries. No surprises there. 20 African countries. But something interesting is that their subsidiaries actually outperformed their domestic arm. What do you make of that ratio? I'm trying to look for the ratio here. I think it's about 61 point something percent. 69 actually, 69.22%. What do you make of that ratio? What are your thoughts on that? Let me get the picture from you.
Yeah, I think there are two ways to look at it, but I think it's more like a positive, such that what you're saying is that UBA is gradually turning to be, not to be a Nigerian bank, so to be an African bank. So what you see that some of those banks, what they are trying to do is that, look, they want to reduce the contribution of the Nigerian entity to the group's performance, not by the Nigerian entity's profit reducing, but the subsidiary increasing their performance. Because what that one will show is that, look, one, they won't be seen like a Nigerian bank in any ratification, even in terms of their credit rating, in terms of their assessment. For instance, if you want to look at a bank like Standard Bank now, it's going to be difficult for you to look at it as a South African bank. There are a lot of people that even don't know that Standard Bank is actually a South African bank. It's seen like an African bank, right? So that one is actually even helping UBA. But the other side is that what is also showing is that, look, it's same as if the Nigerian subsidiary is actually playing catch up to the subsidiaries. The subsidiaries are actually even outperforming. If you look at all of them as a group, right, you see that they're actually performing the parent, which is the Nigeria entity. But having said that, so a lot of banks will tell you that, look, they're happy with that because that shows that, look, their exposure and vulnerability to the headwinds and what is happening in Nigeria, it shows that it's actually even reducing.
Diversify is what I hear there. And I think now more than ever it's important. Now, on the other hand, we have Zenith Bank. They're the most profitable bank, of course, in 2024. But fewer offshore units. They're not so concerned, about it appears, at least from what we're seeing in their books, their contribution or their operations are not as heavy, and their contribution of these offshore subsidiaries are not as heavy. They just have three subsidiaries outside of Nigeria, four actually, three African, one UK, but they still emerge the most profitable bank, even as a group. So, I mean, what's happening here? Do you feel that this is their modus operandi? They should stick with it. It works for them, or do you also see them diversifying them more?
I would say that I'll say that in the banking industry, the best thing is that know your strategy and keep to it, right? And like someone will tell you that one of the C's of bad credit is actually even copying what others are doing. And having said that, if you look at Zenith, their strategy is quite different. In terms of growth, the growth has actually been organic, right? And in terms of even foreign operations, there seems to be quite among the top 5 banks, like you mentioned, they actually have the least subsidiaries. But having said that, I think there is a gradual shift in that. If you notice that Zenith have gotten approval to operate, to have a subsidiary in France, and one of the disclosures about the process of the capital that they raise is to try and even strengthen the France subsidiary, and also see how they are also exploring the Francophone countries, right? On the backbone of that, the Zenith Paris. But having said that, yeah, I think the strategy has actually worked, but it seems as if they're actually even trying to pivot down a bit, trying to even try and see if they can bring in more subsidiary, particularly because there are a lot of opportunities in Africa. And at times we underestimate what you actually have in Nigeria. Is when you go into other banks, that's when you see the gaps, right? You see the kind of values that Nigerian banks can actually even give into some other countries. I remember going into one African country, and after I first mentioned that I'm in Nigeria, the first person said that, oh, thank you for the banks. Because what the banks did there, Nigerian banks did there, is to actually change the face of banking. What they understand and what they understood as banking, everything was changed, everything was modernized, and things got better. So I see a gradual shift in Zenith, right? I haven't said that from the way things are going, I don't see them getting to be like a UBA, where a lot of the subsidiary are contributing significant profit. At
All
least
right.
in the
I
near
mean,
term.
different strokes for different folks, indeed, and whatever works for you in terms of strategy. We are going to dive just a little deeper into this conversation after this break. Ayokunle, please stay with us. Evidently, foreign subsidiaries are playing a stronger role in their contribution to tier one banks. We have with us Ayokunle Olubunmi. He joins us from Agusto and Co. And he's been sharing us, giving us quite the insight into some of the details and the strategy around this for some of the big banks. We've touched on UBA. Thank you for staying with us. We've touched on UBA. We've touched on a bit. I think we touched on Zenith Bank. Let's come to Access Bank now. And they have operations across 15 offshore countries. But we're seeing that with Access Bank, they're out of Africa, that is their UK branch, is contributing much more than even the African banks. They recorded some losses within their African subsidiaries. What does this say about the strategy around, expansion within Africa and outside of the continent? What do you make of that strategy?
If you look at Access Bank, right, I think their own strategy seems to be a bit even different from that of UBA. So you have Access Bank having Access UK outside Nigeria. That is also like an Access UK. If you look at it, is also a group on its own, right? Because most of their foreign, their subsidiary outside Africa are also under Access UK. So you have Access Paris under Access UK, Access Malta under or Access UK. So you have all of those subsidiaries under Access UK, and then also then you now have the African subsidiaries. But also note that Access Bank didn't ramp up these expansion until like about 5 years ago when they are going aggressive in terms of even getting those subsidiaries, particularly in Africa. So what you see is that some of them are still in their infancy stage. And also note that what Access Bank did was to use an inorganic strategy, trying to acquire some of those subsidiaries. So meaning that you still need to turn around those subsidiaries, change their mode of operation and things like that. So you see some of them are still at their teething stage, and I think that's why you see that the contribution seems to be lower relative to Access UK. For Access UK, of course, we all know that Access UK focus is primary trade finance, and they've been very bullish, supporting various African banks, right, both in Nigeria and even outside Nigeria. But I think in the near term, I expect the improvement in the performance of the African subsidiaries. But having said that, I think Access UK will still be the dominant leader given their strategy that they have. Right.
I mean, more than half of their contribution from foreign subsidiaries came from the UK alone. But I mean, we'll see how they continue to expand in time ahead. Of course, we're asking where's the CBN and the risks and the regulation in all of this. So, I mean, give us a picture of perhaps the role CBN has been playing, needs to continue to play to maintain strong oversight, right, and order within the sector.
So for the Nigerian banks, right, even if you have foreign subsidiaries, you are still even under the purview of the CBN. So you notice that for some activities, what they even need to get the approval of both the domestic regulator in the country where they're operating and also that of the CBN, right? So you also have like a dual reporting rule. So the CBN has also played an active role in those expansion. For instance, before you even get any subsidiary, right? Before you acquire any subsidiary, before you go into any country, you need to get the approval of the CBN. And also, there's also what they call like College of Supervisor, where you have the CBN and also the domestic regulator of the banks operation in those other countries. So you see them having like should I call it like a seminar or a forum, where in which the CBN and all the other regulators, they're coming together to discuss the issues, what they are saying with that particular bank, and what they can also even do to get better. But having said that, the CBN is actively following the activities of those banks. But not only the CBN, they also have a reporting role to the domestic regulator.
I mean, it's very important. So we have stability within the sector, offshore or within shore. Thank you so much for joining us, Ayokunle Olubunmi, Head Financial Institutions Ratings at Agusto and Co. A pleasure.
Thank you for having me.
Yeah.